Yes, sir. Which was
Yeah. So basically, we talked about the objective of the sum of future stream of free cash flows over various periods divided by 1 plus k raised to n. And financial management is all about where you bring money and where you deploy. So source and use of funds in a way, source the funds and use the funds or invest the funds in a way that can maximize the value of the firm. So that is what the financial management is all about. And we understood a concept of free cash flows, right? What are the interesting things we understood in free cash flows? What is free cash flows? What is free cash flows?
cash flow from business operations.
Cash flow from operations minus cash flow from
investment.
investments, right? And we actually try to understand them in the context of I give an example of ONGC, then PCS, and a startup. And you can understand that how the cash flow of these three different types of business will be different. And what are the three different types of cash flow? So cash flow from operations, cash flow from financing, and we also understood okay, then what else we discussed?
Operation.
Yeah, we discussed negative working capital भी हो सकता है. Then we discussed DMart and then we discussed IBM and then Dell and all we try to understand how their financial management policies are different. So all kind of things we studied and how Adani is different from in terms of deployment of what else? What else we studied?
So like Gaurav mentioned, the financial statement we looked into of
We try to understand financial statement and in that balance sheet and we actually looked at the balance sheet and income statement. So these are the aspects we looked at. What else? So these were the concepts we learned. What insights you gained? These were the topics or concepts we came to know. But what insights you gained?
the dividend decision is what was what I gained last in our last session, and the four decision of finance which you have taken us through. This is what I have learned. Apart from that, the balance sheet was the one thing which was because we have gone through that with the even we didn't get that to get into all these things. It's was my conclusion. This
Okay. So we looked at balance structure and so balance sheet actually showed us where the money has come from. So the money has come from shareholder and loans, and there are short-term money which comes of current liabilities and provisions, and the sources of funds are known as liability. So long-term are the non-current liability and short-term are the current liability. Then we looked at where the fund are being put into use. So the company puts money into fixed assets, investments, intangibles, current asset, loans and advances, cash and bank, and uses of fund are called assets. So wherever funds are used or deployed, they are called assets. So if you have a cash, it is called asset. If you have a license, it is called an asset. If you have patent, it is called an asset. If you have an intangible asset, it is called assets. If you have land, building, plant, machinery, technology, it's called an asset. So where you have used the money, you have used the money to create assets. And those assets will in turn help for firm to create the revenues and operating cash flows and ultimately enhance the future value of the firm. Then we looked at the income statement. Income statement summarizes the firm's revenue and expenses over a given period and contains information on the profitability of the firm during the same period and indicates the flow of sales and expenses and earnings during the time. That is what is income statement. And then there is also a cash flow statement. So what is a cash flow statement? There is an interesting statement which is called cash flow statement. And cash flow statements integrates information on the balance sheet and income statement underlying the items that affect the cash flows. So for example, one company booked a profit of 400 crore, but the company had 1600 crore in receivables. So they generated revenue of 2500 crores for a quarter, but 1600 crore of the revenues have not been realized. Company registered a profit of 400 crore. So if you look at P&L statement, then you will not understand the cash position of the company. So therefore, you have to prepare something called cash flow statement. You have to prepare something called cash flow statement. It integrates the item on the balance sheet and income statement both and shows the effect of the firm's cash flow on income flows and change in the various items in the balance sheet. And there are three sections in the cash flow statement. There are three sections in the cash flow statement. The first section is cash flow from operating activities. The second section is cash flow from investing activities. And the third section is from cash flow from financing activities. Now let us try to understand the cash flow statement of a company. So I'll just open that balance sheet for you and we'll try to understand that cash flow statement in the TVS Motors balance sheet. Can you see the TVS Motor balance sheet? Array. PDF?
Yes.
Yes, sir.
Yeah. You see the racer bike? Okay. So we looked at the company's financial performance and we looked at the company's balance sheet in the last interaction. Then we looked at the company's profit and loss statement. Now there is third statement which is called cash flow statement. So what does this statement show you? This statement shows you cash flow from operating activities. That is the first thing it shows you. Then it shows you the cash flow from investing activities in detail. And then it shows and then so it shows cash flow from, so what is there? That company generated a profit of 2780. But depreciation is not a cash item, so we add back the depreciation. However, company has made a loss on sale of investment. Now why this is the cash flow, this is the profit. We add back and adjust all the non-cash items related to the operations. So first we add back 700 crore. Why? Because it is depreciation. So even if I made profit of 2700 crore, I have not incurred cash of 700 crore. It is just an accounting entry. So you buy a car in the year 2000 for 10 lakh. But every year the value of the car may deplete by 1 lakh for 10 years. Then in 2025, the value of car is 5 lakh. But how does that reflect in income statement? It reflects in the income statement in the form of that whatever is the income you have generated minus 1 lakh depreciation for the year. So every year you take 1 lakh depreciation and 1 lakh depreciation for this year. And that is how you lower the profit by that. But you actually don't spend 1 lakh. You spend 1 lakh. The 1 lakh you spend 10 lakh when you purchase the car, but every year you account for the depletion in the value of your assets. So company also does the same thing. Company acquires the asset. At that time there is a cash outflow from investment activity. When company acquires an asset, it spends huge amount of cash to buy that asset. But then that amount is adjusted in the P&L statement over years in form of depreciation. So 700 crore is a depreciation. Then there is a profit or sale on investment. So they sold some investment. And what they had, they made losses. So the losses on the sale of investment is cash flow from the investment activity. It is related to investment activity. It is not related to operating activity. Therefore, we have removed the profit on sale of investment. Then we added loss or gain on valuation of investment. So we adjust all non-operating activity. Then we added the interest cost, finance cost. We removed the interest income. We removed the dividend income. So what we did is we are only pertinent about the cash flow related to the operations of the company, not related to the financing or investment activities of the company. Only cash pertaining to the operating activities of the company. And based on that, then there is an operating profit before working capital. So the company made an operating profit of 3,579, and then there is an adjustment of receivables. Means company had more receivables. So last year company had say 1,500 crore receivable. This year company has 1,800 crore receivable. So they have made money, but where is the money left? They have made money, but where is the money blocked? In unrecovered sales, uncollected sales. Then inventories. They've made money, but there is pile up of the stock of inventory. And all put together, finally, they are actually calculating cash flow from the operating. So the company calculated 600 of cash flow from operations. However, company made profit of 2,700. So there is a huge difference between the cash, the net profit and the cash flow from operation. So cash flow from operation is an important aspect of a business performance. Yes, Sanjeev? Sanjeev, you are not audible. You unmute yourself.
Sorry, I was on mute. So why this depreciation is added rather should have been like deducted from the profit, or it should be deducted from the...
In the P&L statement, in the profit and loss statement or income statement, we removed the depreciation, 700 crore. See, in the profit and loss statement, we removed the character to understand the accounting profit. So how much is the accounting profit we made? Accounting operating profit we make is 2780. Then after interest and other expenses and tax, we made a net profit of 2000 crores. So it is removed from the income statement. But when we prepare the cash flow statement, we are adding back because we want to understand how much cash we generated from the operations. So depreciation is not cash entry. It is just an accounting for the depletion in the value of the assets. So you don't actually incur 700 crore of depreciation this year. You just accounted for it. You incur a cash when you acquired asset. And every year you are simply accounting for the depletion in the value of assets. Mm-hmm. Okay, so if you have taken a car, the company may depreciate over 5 years. If you take an electrical equipment, company may depreciate over 3 years. If company has built a building, it will depreciate over a period of 10 years. If company has bought an equipment, a machine, it may depreciate over 6 years. So there are different norms based on the usefulness and life of the asset. The depreciations are recommended by the accounting standard boards as well as by the income tax authorities. So suppose you bought a car this year and you depreciated entire car next year and said, "मुझे कुछ कमाया नहीं, मैंने जो कमाया सब कार में चला गया." तो income tax department will not say that removing the entire value of car very next year and then you say this is my profit for tax purpose and on that I'll only pay tax. It's not. So there are norms available for each and every type of asset. So if you buy computers 3 years, it will be depreciated. If you buy softwares it may be depreciated 1 year or 2 years. So depending upon the wisdom of the CFOs, at the same time depending upon the provided generally accepted accounting practice and the tax regulations, the company will recognize the depreciation.
Okay, so the tax will be calculated on the first number 2780
On the
in this
accounting
case, right?
profit, it will be calculated on the accounting profit.
Means this 2780 or
So 2780 is a profit. वो तो है ना यहाँ से लेके आए थे ना. We brought the 2780 profit. So I made profit of 2000, but I made cash from operations of 3600. But then there is a cash flow from investing activity also. Whatever I made, I invested in plant and building. So I invested 1000 crore here. I also invested 1000 crore last year. Then I had also applied in some companies. So TVS is actually holding TVS. If you look at the investment of TVS, they have dozens and dozens of subsidiaries, and they have invested in dozens and dozens of joint ventures. They have invested in so many mutual fund or other investment schemes, and so here they have actually invested in some company, investment in subsidiaries and associates. Purchase of other investments. So they definitely made this much cash, but all cash is used to buy capital or long-term assets. So therefore, it is called cash flow from investing activity or retire long-term asset. So if they sold the asset, they generated this much cash flow. But if they purchase the asset, they spend this much cash. So all put together, the company has used 1800 crores or 1900 crores in investment. Company generated 3600 crore from operations, cash from operations, 1800 or 1900 crore they incurred on investment, and then therefore the net cash used. I don't know why it is not showing the next page. Acha, I probably skipped this page. Last page is missing. Oh, why is that missing? So don't worry, I have other way to show you. So don't worry, I'll open the screener. What do you see? You see the browser? What do you see?
Yes, sir. Screener something.
So it's very easy for me to show you. So if you look at this company, this is the company that we are talking about. The company has a share price of roughly 324 in April 2016, and today the company peak almost share price it reached at almost 4000, and today the company share price is 3400. So somebody who has put 300 per share, today it is 10x. You can see how elegant is the wealth creation chart that this company has done. है ना, किसी ने यहाँ 100 रुपया डाला होता तो अभी कितना होता उसके पास? 1000. Okay, now so 10 here. I can show the maximum also. कितना दिखा रहा है? Oh, so if somebody has invested way back in July, जब उनका public issue आया था April में, the value of the share was 35 rupees, and today it is 3500. So power of long-term investing, if you can pick up a good company and you put money and then forget, आपके बच्चे को बहुत पैसा मिलेगा. Your kids will, you'll inherit lot of wealth. So investing is all about long-term. Now let us try to understand the cash flows. Okay, let us try to understand the performance. So what has been the performance of the company over the period? So the company generated a revenue of 8,000 crores way back in 2014, and today that we looked up to March 2023. So they made 3,200 crore of revenue. So the report I have shared is of March 2023, but then 2 years उसके बाद 3 साल हो गए. So they made 3,200 crore worth of 32,000 crore worth of revenue. And today, the last 12 months, TTM. So basically, first January 2025 say 31st December 2025, if I take the period, in that one calendar year or that 12 month, the company generated revenue of 52,000 crores. But we were actually 31, and then the company generated profit before tax, and then finally tax. And sorry, I am giving you the standalone balance sheet. I don't want to give the consolidated. The reason I am giving standalone is very important to know. So if you look at, we were looking at these data, and 2083 was the net profit the company made. 2,718 was the profit before tax, and operating profits of 3,500. The company over the 10 years have grown at the rate of 14%. And company last 12 months have grown at the rate of 26%. And the company's profit has grown by 50% in last 12 months. And company stock price have grown at a compound annual growth rate of 27% over last 10 years. Which investment can give you 27% return?
No investments.
So if you can pick up a good company, you have struck a gold mine. And return on equity 25%, and the last year it made 31%. So this is the profit. You can see how from 7,000 or 8,000 crore it has gone to 32,000, which the data we studied. And if I take up to the last year March, it is 36,000, and up to 31st December, 12 months ending 31st December, it is 4,400. And the company clocked a net profit of 3,400 crores. And earlier it clocked 2,000 crores. So we are only looking at data up to this. Now let us look at the balance sheet. The company has a share capital of 48 crore, and the reserves has gone up every year. And you can see the reserves that we studied was 7,684 crore. In March 2025, it is almost 10,000 crore. And there is a reduction in the reserve here. Why there is a reduction in reserve here? Any clue?
Because this is only 6 months, sir. March 2025 to September 2025.
There is September. So we don't want to. Let's wait for the 30th March 2026. वहाँ तक नहीं जाना. यहाँ से यहाँ तक there is an improvement because the profit they retained has added here. The profit that they retained has been added here, and the total assets when we studied was 16,000 crores. Now it is almost 20,000 crore. And now let us look at the cash flow statement. And look at this. The company has been consistently generating cash from the operation. 524 crore in March 2024. 2014 year ended 2014. 85 crore cash. 941 crore, 724, and then off late it has generated a cash flow from operations of 4,200 crore. But of which they have invested, they've been consistently investing money in the business, back into the business, and then they have been also borrowing money and repaying the money. And this is what is the cash flow from financing activity. So we were not able to see the cash flow from financing activity in my previous slide. So therefore I opened the screener to make you understand. So what has happened? How company has used the cash? They have paid interest of 214 crore. They have repaid the borrowing of 729 crore. They have paid dividends of 380 crores. And they have retired financial liability of 107 crores. And finally they are left with net cash flow of 251. So these, and then the company has a free cash flow. The last figure is free cash flows, and the company last year generated a free cash flow of 2,500 crores. Dharmendra Pradhan. Kumar.
धर्मेंद्र कुमार
सॉरी,
सर.
अभी कल ही बात हुई थी ना प्रधान जी से.
Sir, just one thing. Cash flow operation activity means company bringing money into organization.
No, not bringing.
Huh.
Company has sold the products,
Huh.
and so they have received cash by selling the products, and company has incurred cash to run the operations and make those products. The difference between that is cash flow from operations.
Means company have some product, they have sold it, they and they got the money. With the money they have investment, same money they have investment in again next time, right?
No investment, yeah. You are a trader. You bought merchandise worth 1,000 rupees and you sold it in 1,500. So 500 is a profit you made, but you
Yeah.
also incurred some expenses like rent, employee expenses, depreciation, and all. So you made 300 crore of profit, but that is your profit. That is not your cash. So what I am saying is to run the operations, how much cash you generated by selling the products in the year and how much cash you incurred to make that product and sell that. The difference between that is cash flow from operations. But during the year you purchase a car, then it's not going to affect your cash flow from operations. During the year you purchase a building, it's not going to affect your cash flow from operations. During the year you sold a building, sold a car, it's not going to affect your cash flow from operations. It's going to affect cash flow from investment. So cash flow from operations only talks about the routine operating expenses and the operating income. The difference between operating income minus operating expense. But you have made an investment income and you have made an investment expenses, then it will reflect in cash flow from investments. And you have generated cash by raising debt, then cash flow from financing will be positive. If you have repaid the debt, you have paid the interest, you have paid the dividend, if you have done a buyback, then cash flow from financing will be negative. So the net effect of the cash flow from different activities are here. The net cash flow from operating activity company generated is 3,600. The net cash company generated from investment activity is 1,800 minus
Means this is cash from investing. This is negative against the operating.
So company would have incurred money to buy plant, machinery, land and building. Company would have sold some investment. Company would have made some investment in assets, in financial assets, in tangible assets, in capabilities. So the net of it is 1,800. Any charge that they would have sold some assets, they have purchased some assets. Net of it is this. And finally, company has cash flow from financing. That company has actually, meaning that company has retired 729. So cash flow from financing is negative. Cash flow from investment is negative. So 3,600 minus 1,800 minus 1,400, they are left with 251 crore of cash only. The profit was 2,000 crore. लेकिन cash कितना बचा?
251 crore.
So where has money gone? So whatever the profit they made from that cash they generated from operations and investment, they paid back loan worth 729.
729 crores.
They paid interest worth 214 crore. And then 107 is the financial liabilities, means they would have repaid some loans, some financial liability they would have retired. Repay kar diya hoga. And other finance. So net itna bacha hai. So you can see the company has been generating the cash flows. So there are three statements we understood: cash flow from operations, cash flow from financing, and cash flow from investment. So we studied three important financial statements today. We studied three important financial statements: cash flow from the balance sheet, the P&L statement or income statement, and the cash flow statement. Now, if you have any questions, you ask. So now, suppose I'll ask you a very interesting. I just want to test up something. suppose I sold some 3,000 crore worth of goods, and I received an advance for 5,000 crore worth of goods. What will be the impact on my cash flow and what will be the impact on my profit? क्या ज़्यादा होगा? Cash flow ज़्यादा होगा या profit ज़्यादा होगा?
The cash flow ज़्यादा होगा.
Profit कम होगा.
Cash flow, yeah.
हाँ. But I sold goods worth 3,000 crore, but I could only collect the sales worth 2,000. So मेरा profit ज़्यादा होगा कि cash flow ज़्यादा होगा?
Loss हुआ ना?
Profit ज़्यादा होगा, but आपके receivables में आएगा, so
Yes.
Very nice. Profit ज़्यादा होगा, you will have more profit, but you will have lesser cash. Okay. Now what happened? You clocked the sales of 5,000 crore. But last year your inventory was 1,000 crore. This year your inventory is 2,000 crore. Your profit will go up, your cash flow from operations will be more.
The profit will be more because cash got stuck in the inventory.
Excellent. Profit will be more, lekin cash flow from operations will be less. So therefore, accounting profit and cash profit normally do not match. Okay, it do not match. I sold goods worth 4,000 crore, but I did not pay my supplier 2,000 crore. My profit will be more or my cash flow would be more?
Cash flow, sir.
Cash flow.
Excellent. My cash flow would be more. So cash is the reality and profit is a myth. So whenever you are evaluating a company, you must look at three statements. Now what does cash flow statement do? Cash flow integrates both the things. It integrates the information provided in income or P&L statement and balance sheet. और दोनों को मिला के कुछ हिसाब किताब करके it is only taking you the cash flow of the. So you book the depreciation in the P&L statement, and the depreciation is reflected in form of, so after adjusting the depreciation, you say my net asset values, you will say in the balance sheet. Now both of these has all these information is used to prepare the cash flow statement. So what is important when you are running the company? Profit and loss statement or cash flow statement?
Cash flow statement.
Cash flow statement.
Sir,
As a
cash
manager,
for the short term and profit loss for the long term of the company.
over a longer period, you may worry about profit. On a day-to-day basis, you must worry about the cash flow statement. So you can't manage your money looking at P&L statements, or you don't manage your company looking at P&L statement. You take decisions, you manage your company based on the implication on the cash flows. So as a manager, cash flow statement is more useful than P&L statement. P&L statement is for the reporting purpose, but cash flow statement is more for a management purpose. So all three statements are for reporting purpose, but as a manager, you will find more in cash flow statement than P&Ls. So if I change my method of depreciation, so currently I am depreciating my car. car क्यों बताऊंगा? I am depreciating new equipment I purchased few years back. I was depreciating over 10 years. Now I decided to depreciate the equipment over 5 years. Will it have what impact it will have on profit and loss statement?
Profit will decrease substantially. No effect on cash flow, I believe.
Excellent. There will be some effect on cash flow statement because आपका tax liability बढ़ेगा. So basically, you are right that cash flow में कोई effect नहीं होगा, लेकिन some जो incremental tax आपने जो कम दिया, इसकी वजह से थोड़ा cash flow आपका बढ़ जाएगा. Because you were earlier depreciating your equipment for 10 years, now you are depreciating equipment for 5 years. So your profit has come down and therefore your tax liability has come down. So when we prepare the cash flow statement, we add back to the net profit. So cash after tax तो दे दिया ना, cash tax outflow is cash. Depreciation is non-cash. So effectively there is no effect on the cash flow statement, but to the extent there will be some change in the cash flow statement because of the lower tax you pay. So for example, you take a house on loan. Why you take house on loan? Even if you are sitting on lot of cash, तुम घर लोन से लोगे क्यों? Why?
Tax benefits.
Tax benefit. So if you take the loan, then your tax liability कम हो रहा है ना, तो आपके पास cash ज़्यादा बच रहा है. Because of tax, your cash flow impact is positive. But if you purchase a house with all your own money without loan, then income tax effect will be, so tax आपका ज़्यादा आएगा, therefore you are left with lesser cash on it. If you take a loan, you are left with more operating cash on it. So that is the only difference. Now, once you have understood three cash flow statement, let us try to analyze the financial statement. How can we perform the analysis of the financial statement? Before that, I'll just run through some of the concepts of finance. So when we prepare the accounts, we don't prepare based on the logic that we have in our mind. We prepare based on the accounting logic provided by the accounting discipline. So there is first is accounting concept, wherein we prepare the financial statement based on certain assumption. क्या assumption होता है? One is company is a going concern. So suppose I have sold the product on credit, right? But I will show profit. I have sold product on credit, but in P&L statement I will show profit.
Yes.
क्योंकि sale हो गया, sale is occurred, and the money is to be received, but not received now, but in future. So I have already, my profit is occurred, but cash is not received. So therefore, we use accrual principle and we use going concern principle. कि कंपनी बंद नहीं होने वाली है, आगे चलेगी और next year कंपनी चलेगी तब मेरा पेमेंट आ जाएगा. So going concern is one assumption that goes in preparing the accounts. Right. So there are accounting principles. So there are rules derived from the concepts and accounting convention, which is then generally agreed practice of accounting that a region follows. So in every region there is a generally accepted accounting practice. So there may be some variation in the accounting practice of India vis-a-vis Europe vis-a-vis US. And we have adopted accounting convention or practice as per the economic and other assumptions, as per the contextual assumptions of our country. And accounting standard is an official guideline issued by the authorities for the, and based on which. So let us look at the accounting concepts. The first is business and owner are separate, and we only record monetary transactions. So in P&L statement, we will not say that we sold 50 lakh pipe or 40 lakh pipe. We will only show we have generated revenue of 32,000 crores. In P&L statement, we will not show that how many units of electricity we have consumed. We will not show how many components we have consumed. We will not show how many people came to work and how many employees were given work. We don't write how many machines we have. We said value of plant and machinery. We don't say number of machines we have. Similarly, we don't say number of labor or number of hours that has been put in. We said how much employee expenses we incurred. So therefore, we measure everything in monetary terms. We don't measure in non-monetary terms. Second, going concern. Business will continue. So I have purchased a land, I have purchased a car, or I have purchased an equipment for the business. Now, I know that that equipment will last for another 8 years or 10 years. So I will only depreciate 1/10 every year, assuming that I am going to run the business for next 10-15 years and the equipment is going to be put to use and its utility will remain for 10 years. So I will only depreciate 1/10 every year. Okay. So you got the idea what is going concern? कि चलता रहेगा business, बंद नहीं होगा. Accounting period. We have to divide business life into periods. हर साल क्या हुआ? So if you see TBS, which I showed in the screener, every 12 months we have given. So we have broken the life of the company into accounting periods, and we have given the numbers for that accounting periods. Every transaction has a two effect. Means if I buy an asset, what will the effect? If I buy an asset will come in my company, but cash will go out of my company. Clear? When I sell something, when I sell a product, my sales will be recognized, but then my outstanding will go up. Okay, so there will be always two effect of every transaction. So my sales will be recorded in the P&L statement, and my outstanding will be recorded in balance sheet. When I purchase an asset, my cash will come down in my asset, and instead of cash, it will be building. So मेरे पास 50 लाख का cash था. Now I have 50 lakh building, so I have 50 lakh less cash. So there will be effect. Cost concepts. We record everything at the original cost. So interesting point. Suppose SBI has the office building where they have SBI has the office building at Cuff Parade or one of the base location decades ago. Today, the value of that asset would be
Thousands of crores.
billions होगा, लेकिन they are recorded at the historical cost, not today. तो बैलेंस शीट में वैल्यू ऑफ असेट्स है, वैल्यू ऑफ प्लांट मशीनरी लैंड बिल्डिंग है, तो they are recorded at the acquisition cost, not at the today's cost.
So sir एक क्वेश्चन है, तो डिप्रिशिएटेड वैल्यू कैसे लेंगे फिर उसका?
So depreciation हो के, so you purchase a land for 1 crore, and you know the land is going to have a so long life, so 50 साल 60 साल, so you will depreciate very small amount every year, and your book value of land from 1 crore will go down every year, and in your book, once entirely depreciate, the value of the asset is recorded at ₹1, not ₹0. So the land record, the value of land recorded in SBI balance sheet is only ₹1 for those which have been acquired years ago and are completely depreciated.
बट सर अपन डेप्रिशिएट कर रहे हैं, बट एट द एंड ऑफ द डे लैंड का कॉस्ट तो बढ़ रहा है ना, तो वंस दे विल सेल तो हाउ
You
विल
are not purchased ना, आपके जेब में से कितना गया वही लिखोगे ना.
ओके 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 कंपनी के नाम पे सो
नहीं, आपने उस नॉट कंपनी ने उस वक्त जेब से कितना दिया वही लिखोगे ना. हाउ कैन यू चेंज एवरी ईयर?
राइट बट सर एट द एंड ऑफ द डे कंपनी का वैल्यूएशन तो बढ़ रहा है ना वो लैंड का, तो हाउ विल अकाउंट?
So there are three valuation concepts. Accounting value, which is called book value, market value,
ओके
and the liquidation value. So my book value of like मैं TVS में ही दिखाऊंगा ना, फिर मैं क्यों? Let me then answer that question. Let me open that screener so that I can more meaningfully give you the answer. Where is the screener? Here is the screener, right? So basically, the book value of the share is 205. The current market price of the share is 344. Now, how can it be, sir? How can it be two different things? So, what is the book value? As per the accounting books, what is the net worth the company has divided by number of shares is the book value of the shares. But but in the market, the share is traded at. So in accounting statement, will they record the share capital as 3,445 current market price into 47 crore shares? Nahi.
Okay.
The cost of the company is 205 rupees into 47.5 crores. When you purchase a house, you will record at the purchase price. But when you sell it and when you realize the money, then only you pay taxes. Till then, what will you do? So if company recognizes re-recognizes the value of asset they purchase because it is appreciated every now and then they will have to book profit. They have to show profit. कि हमने लैंड 1 करोड़ में लिया था, अभी 10 करोड़ है, तो अभी वैल्यू 10 करोड़, तो बोले हाँ लिखा दो 10 करोड़ बैलेंस शीट में, तो बोले डिफरेंस कहाँ से आया, 1 करोड़ 9 करोड़ कहाँ से आया, तो कैश तो आया नहीं है, तो वो तो नॉशनल नहीं है, it is not has happened, so you will end up paying tax on 9 crore profit, which is actually not. So that's the underlying assumption and logic of accounting. So what I am trying to make you understand is accounting is built on some concept, some logic. So this is the logic of accounting. Okay.
But can the book value also go up?
What?
Can the book value?
Yes, it will go up every year. How it will go up? I'll show you. The book value will every go ahead. So equity capital was 47.5 or 48 crore. Every year it is 48 crore, right? Every year their reserves is going up. Why reserves are going up every year? Why reserves are going up every year?
प्रॉफिट बन रहा है तो
We are plowing
नहीं
back
बचा, वो
profit.
वापिस धंधे में लगा है, तो रिजर्व तो वो पैसा तो मालिकों का है. So what is the book value? Book value of the share is
205.
हाँ नहीं, so it is, so basically your 48 crore plus, so suppose if I say March 2025, सितंबर में नहीं जाना क्योंकि वो आधा साल है, वो नहीं करना मुझे. 31 मार्च को साल खत्म हो गया. अगर मैं मई में पढ़ा था तो मेरे पास ये भी डेटा मार्च तक का आता, लेकिन वो नहीं है मेरे पास. So 48 crore plus 988 crore, so यानी 10,000 crore is roughly my
रिजर्व
टोटल शेयर होल्डर का पैसा, रिजर्व्स प्लस ओरिजिनली 48 लाख, सो 10,000 करोड़ हो गया. हेलो,
यस
clear.
यस
या डिवाइडेड बाय 48, 205 आएगा कि नहीं?
Yes, okay.
ओके, अब 2
हाँ
साल
आ रहा है.
क्या था, 48 और 6,000 है ना, तो 6,048 डिवाइडेड बाय 48, तो इतने साल पहले उसका बुक वैल्यू था roughly 150 and अभी book value है roughly 200.
And sir, what is here?
Here value has gone up. सरस्वत बोलिए.
ओके सर.
इंटरेस्टिंग. अब मजा आता था नंबर देखने में, कभी बैलेंस शीट देख के आंख बंद कर देते, कभी कैसा.
हाँ सर, कभी इसमें पैसा लगाए थे, अफसोस होता है कि क्यों निकाल दिए. 2500 पे निकाल दिए सर.
ठीक है, किस्मत में इतना ही प्रॉब्लम था. अच्छा क्या निकाल, अभी 3.5 में ले लो, मार्केट डाउन है, ये कंपनी तो चलेगी.
सर अभी इतना इन्वेस्टमेंट हो गया है कि अब पैसा नहीं है, अब कैश नहीं है अब लगाने के लिए.
एक्सेलेंट, यही हो गया. सबकी हालत ऐसी है, वो गिर रहा है, पोर्टफोलियो गिरता है, इतना गिर गया और ट्रेन हो गया पूरा. अब वो करेज नहीं रहा फिर से डालने.
करेक्ट.
So I answered the question, Faisal.
Yeah, clear sir now.
Yeah, so what you can see the slide now.
Yes. No, that screen, no, screener only, screen. No, that's no screen.
I will go back to the slide now.
Yeah.
Click on here. Okay, so now you understood dual aspect, cost concepts, then realization. Revenues are realized when sales have happened, not when it's collected, okay? And expenses are recognized when they are occurred, not when paid. So suppose I hired my employee for whole month, right? So no, I procure. Sorry, I'll give you a better example. I procured material from the supplier, what 1,000 crore, and I also recorded a sales of 1,500 crore. So 1,000 crore that I have procured from the supplier will be recognized when I actually ordered and that material came to my place. And sales will be recognized when it has occurred, but my collection has not happened and neither I have paid to the supplier. So when I pay is not coming in the account, when I occurred is coming into account. Understand? So for example, I run my factory for the whole month. Every day there is an electric consumption that is happening. So when I want to calculate my profit, whether I paid electricity bill or not is immaterial. Whatever is the electricity I have consumed, that expenses has to be removed from my income to know the correct one. I may pay electricity bill next month, but I have already consumed and incurred electricity. Therefore, that expenses has to be removed to know the profit. Okay. And then matching. There will be always match of expenses. Means the expenses of the revenue of the period is matched with the expenses relevant to that period. So you have to match. So these are some of the underlying logic. So now with this logic, you'll be able to better understand the accounting logic. Then there are some accounting principles. Meaning that business and owner are separate. So if you say share capital, then Sundaram family has lot of money in TVS. So TVS Motor is different from Sundaram family. Okay, and we are preparing, looking at the balance sheet and income statement of TVS Motor, not Sundaram family. They are two different entities. Going concern, business will continue operating. Historical costs, record assets at original cost, accounting period, divide business. Yes, this we already see, right? This already we see. Okay, this another conventions. Another element of accounting is convention. What means conservatism? Means we will record losses early, not gains. So, for example, when a company has sold an equipment and the equipment has a warranty, then we don't recognize the entire revenue on the equipment we have generated. For example, right, I'm on the board of Shakti-Pam. I'm also the chairman of audit committee there. For instance, we sold some 25,100 crores worth of Kusum pumps, solar fitted pumps to Maharashtra government. Okay, we sold that much. Now these pumps, under that government order, we have to also provide the services till next 5 years. So though we sold pumps for 2,500 crores, we don't recognize 2,500 crore as the revenue. We recognize 2,300 crore of the revenue. So 200 crore, where has it gone? 200 crore is the so we may not get the money. Then, so we have set up 2% bad debt. Then we have sold that product, but it may require servicing in future. Now I cannot recognize the income from the guarantee part of the product in this year. I will only recognize the income from the guarantee part of the product when, because of the request for the customer, I delivered the service. So some part of the income will not recognize in this year. That will be recognized and set aside for the year. Though my sale is of 2,500 crore, I record revenue of only 2,300 crore. Why 200 crore I am not recording? Money may not come. Some money may be outstanding. Then some revenue are generated because of the services. Same happens with when you buy annual mobile recharge. When you do annual mobile recharge, you do for 4,000 rupees, right? So I did recharge today for 4,000 rupees in Airtel. Now that 4,000 rupees is not the revenue that Airtel will recognize on 31st for the year ended 31st March. 2 दिन बाद, after 2-3 days, साल खत्म हो जाएगा. Airtel will not recognize 4,000 crore as a revenue. Airtel will only recognize 4,000 divided by 365 days, क्योंकि मैंने लिया है
एक साल के लिए,
1 साल का, तो दिन का यानी 2-3 दिन का ही रेवेन्यू रहेगा इसका, एंड रिमेनिंग ऑलमोस्ट पूरा ही पूरा अमाउंट ऑलमोस्ट 3,900 इज द इनकम दैट विल बी कस्टमर एडवांस. मैंने पे कर चुका है लेकिन मैंने सेवा नहीं ली. So understood conservatism,
yes,
understood the accrued. Then consistency. I cannot keep on changing my accounting method. Last year I took a depreciation which was straight line method. Abhi this year मेरा मन बदल गया. Can I do double written down value method? Next year मेरा मन बदल गया. Can I do instead of depreciating my equipment for 10 years, can I rechange my depreciation method and उसको 7 साल में कर दूं या 15 साल में? इस साल मेरा I have made this year I expect less profit. If I expect less profit, why don't I change my depreciation method? I've been depreciating assets for 7 or 8 years over a period of 7-8. Let me now depreciate of 15 years. Automatically my depreciation will come down, my profit will show up. You can't do that. Clear? Then full disclosure. You can't hide any material information. You can't disclose, but you can't hide any
information.
important and significant. कोई चवन्नी अठन्नी की information मिस हो गई तो problem नहीं है, but all material information जिससे मेरे decision में फर्क पड़ेगा. So anything. So we then materiality focus on significant items. So in fact there are certain items which are having value. So a company has a balance sheet of 1,000 crore. Any item which is of more than 10 crore is considered material. But my company's revenue was only 100 crore. Any item which is more than 550 lakh is considered material. So materiality is important. Okay. So it's important that decision usefulness means 19-20 चलेगा लेकिन 15-20 नहीं चलेगा. Does it make sense, guys?
Yes.
Yes.
So now there are accounting standards. So each region has their own accounting standards. So India has its own Indian accounting standard. Europe has International Financial Accounting Standard. US has US GAAP. They maintain more or less uniformity, how you recognize revenue, how you book depreciation, all this. So therefore, uniformity in accounting practices, comparability of financial statement across the firm. So you should be able to compare financial statement of different companies without much, because they follow more or less same practice. Otherwise, comparability will not happen. Transparency and reliability of information. We must protect the investor interest. So why we are preparing financial statement? Because financial statement we are preparing because in the company, investors have invested money apart from the owners of the company. Okay. So owners have invested, but investors have also invested. Shareholders like you and me have invested in a company. L&T में हमने पैसा लगाया. We have a right to know how the company is doing. We don't sit in the company day in and day out. So therefore, company has to tell us every 3 months how much revenue company has generated, how much expense under different heads company has incurred, how much profit has been there. And so basically, and then that has to be filed. That has to be reported to the SEBI, and then that has to be, so basically for that. And reduction of accounting manipulation. You can't manipulate. So if you do this, if you mess up, then it is called criminal liability. Okay. So every financial statement, if you remember, I showed you at the end of the financial statement in DPS, these people's name are there. What does that mean?
I mean, these people are responsible for this, correctness of these reports.
Materially garbad kar diya hai, so then you can put them behind the bars. Okay. अभी मजा आ रहा है अकाउंट में? यू आर फीलिंग इंटरेस्टिंग अबाउट अकाउंट? नहीं तो अकाउंट तो बहुत बोरिंग होता है. मैनेजर अकाउंट क्या है ऐसा? वो सब तो नहीं है. इट इज
नाउ वी आर रियलाइजिंग बार बार अकाउंट वाला फोन करके बोलता है कैश फ्लो बताइए. सो व्हाट इज द रीजन दे आर आस्किंग अबाउट दिस?
है ना. So I think this is so if you have any questions, but हाँ, I think deferred tax liability किसी ने पूछा था. मैंने I did not answer that. आपने पूछा.
Yeah, sir,
something.
I ask, can you elaborate further for deferred tax?
So there are certain tax which are due but you are not paid. So that is called deferred tax liability. So company, as and when company generates income, that tax liability is due.
Okay.
So there were many times certain cases company if is locating their businesses in certain locations, companies get tax holiday. Company से allow कि आप अभी tax मत देना, बाद में देना.
Okay.
So all those deferred tax liability है but अभी defer कर दी. I have deferred the tax liability.
Yeah, maybe liability means actually we will pay in the future, but at this moment we will defer.
But we have set aside. So we can't show my. So I have to remove deferred tax liability to show my true
Cash.
profit.
Okay.
Got it. So
Understood.
I have this year my profit is 3,000 crore. Lekin I have not paid the tax, but I have to pay tax of 250 crore, and the tax is not to be paid now because of some government regulation. Something is there. So then you can't say profit is 3,000 crore. Even though you have not paid the tax has to be paid. So you remove 250, and you say no, so my deferred tax is 250, so therefore my profit is not 3,000 crore, my profit is 2,750 crore.
Okay, understood.
So now you understand revenue recognition and expenses. You have to recognize the revenue and expenses even if you are not incurred. Whenever it has occurred, whether you are paid or not is a different thing.
The moment it is in occur, we have to report.
So this is called accrual principle.
Okay.
Okay. Yeah. So any questions? Any query now? Okay. Now I'll just quickly show you a very interesting thing, which is. No, I don't want to close this now. I'll just show you Excel. Where is my Excel? Okay, here it is. So what I have done is put all the data of TDS in Excel. So what we are trying to understand is how to analyze the financial position of the company. And let me adjust the size. So what I have done is I have a data from बहुत लंबा डेटा है something है. So March 2011 से. So I started teaching that, and every year I started adding the data. Then my sheet became so big, then I stopped adding because it becomes so big. So basically, what you see is here is an income statement over last several years. Now, how do you analyze these statements? How do you get the meaning out of? So there are two methods. Common size statement, vertical and horizontal. So what I have done is I have prepared a vertical common size. What does that mean, vertical common size? Vertical common size means everything is a percentage of the total of that year. Okay. So suppose I want to know that this is my total. This is my total income. This is my total income. So how much is my sales turnover as a percentage of total income? How much is my other income as a percentage of total income? And how much is my stock as a percentage? So this may not would be love. You love to know that how much is my raw material expense as a percentage of total income. How much would be my power and fuel expense as a percentage of total income? how much will be my selling and administrative expenses percentage of total income, right? If I do that, it looks very interesting. So let's try to understand in this. But I'll have to first lock the panes, otherwise it will be difficult for. So over so many years, the sales have grown by 10% compound annual growth rate. So I have data for roughly 12, 13 years, and over so many years, company has grown by 10%. And total income of company has grown by 11%. But your material expenses has also grown by 11%. Your power and fuel expenses have grown by only 2%. Your employee costs have grown up by 11%. Your other manufacturing expenses over 2011 to 2024 has grown by 3.37%. Selling and administration, miscellaneous expenses, and total expenditure have grown by 10%. So interesting is there, your revenues have grown up by 11%. However, your profit before tax have grown by 17%. It shows the managerial efficiency. Clear?
What it shows? Sorry, I could not.
Sales.
Company growth.
The employee cost has also grown at a higher rate than sales. Then how will you make money? In the